Hey everyone, it's Javin Tharp, and welcome back to the channel. Today we're diving headfirst into the exciting world of stock trading. But done right, it can also be incredibly rewarding, and it doesn't have to be as complicated as you think. Whether you're starting with a few $100 or a few thousand, this video is your roadmap to navigating the stock market. We'll break down everything step by step, from understanding the basics to placing your first trade. So buckle up, grab your notebooks, and let's get started. Before we even talk about buying a single stock, we need to address the elephant in the room, the difference between trading and investing. See, a lot of people use these terms interchangeably, but trust me, they're two very different beasts. Investing is like planting a tree. You buy a piece of a company, that's your stock, and you hold on to it for the long haul, like 5, 10, 20 years, hoping it grows into a massive oak tree. You're betting on the company's long-term success. Think of it like owning a rental property. You're in it for the long game. Trading, on the other hand, is more like, well, trading baseball cards or sneakers. You're buying and selling stocks within a much shorter time frame. We're talking days, weeks, maybe even just hours. The goal here is to capitalize on short-term price fluctuations, riding the waves of the market to make a quick profit. Investing is generally considered less risky, while trading requires more active involvement and comes with a higher risk, but also the potential for faster returns. The important thing is to choose the approach that aligns with your individual circumstances and goals. Alright, so you've decided to dip your toes into the trading waters? Awesome. Your next step is to find yourself a brokerage account. This is essentially your gateway to the stock market. It's where you'll buy, sell, and hold your stocks. Now, choosing a brokerage account can feel like navigating a minefield of fees, features, and platforms. Some of the most popular options out there include Robinhood, Webull, Fidelity, Charles Schwab, and TD Ameritrade. Each platform has its pros and cons, so it's crucial to do your research and find one that aligns with your needs. Are you looking for a user-friendly interface, commission-free trades, advanced research tools? Figure out what's important to you and then compare. Once you've narrowed down your choices, the sign-up process is usually pretty straightforward. Choosing the right brokerage account is like picking the right pair of running shoes. It can make or break your trading journey. So you've got your brokerage account all set up. Now it's time to inject some fuel into that trading engine. Funding your account is what allows you to actually buy and sell stocks. Most brokerages make it super easy to connect your bank account directly to your trading account. You can initiate a transfer right there on their platform or app, just like you would with any other online banking transaction. Now here comes the important part. How much should you deposit? Look, I know it can be tempting to go all in, especially when you're feeling hyped up about the market. But trust me, it's crucial to start small, especially as a beginner. Start with an amount you're comfortable potentially losing. This is not your rent money, your emergency fund, or your kids' college tuition. As you gain experience and confidence, you can always increase your investment as you see fit. Alright, now for the fun part, picking your first stock. With thousands of companies to choose from, it can feel like you're standing in the middle of Times Square, not knowing which way to turn. But don't worry, there are ways to cut through the noise and find those hidden gems. One of my favorite tools is a stock screener. Sites like FinViz let you filter stocks based on all sorts of criteria, like price range, trading volume, recent news, and even technical indicators. Think of it like shopping for a new car. You wouldn't just walk onto a lot and pick a random car, right? You'd probably have some criteria in mind. Maybe you want a specific make and model, a certain price range, or features like leather seats and a sunroof. The more you understand about the companies you're considering, the better equipped you'll be to make informed trading decisions. Okay, you've found a few stocks that have piqued your interest. Great! But before you hit that buy button, it's time to put on your detective hat and do some digging. There are two main approaches to analyzing a stock: fundamental analysis and technical analysis. Fundamental analysis is like looking under the hood of a car. You're examining the company's financial health, things like revenue, earnings, debt, and cash flow. You want to make sure the engine is running smoothly, so to speak. Technical analysis, on the other hand, is more like studying the car's paint job and checking for dents and scratches. You're looking at charts and graphs to identify patterns and trends in the stock's price movements. There are tons of resources available online, from YouTube tutorials to educational articles that can teach you the basics of stock analysis. The more you understand about a stock, the better equipped you'll be to make informed trading decisions. All right, you've analyzed the stock, you've done your research, and you're feeling good about making a move. But hold your horses. Before you hit that buy button, there's one crucial step you need to take: crafting your trade plan. Think of your trade plan as your roadmap to success. It outlines your entry point, your exit strategy, and everything in between. Without a plan, you're essentially flying blind, and that's a recipe for disaster in the stock market. First and foremost, you need to determine your entry point. That's the price at which you're comfortable buying the stock. Next, you need to set your stop-loss order. Finally, you need to establish your take-profit level. All right, you've got your trade plan locked and loaded. Now it's time to execute. Placing your order is how you actually buy or sell a stock, and there are a few different order types you should be familiar with. First up, we have market orders. These are the most straightforward. You're basically telling your broker to buy or sell the stock at the best available price in the market. Market orders are typically executed instantly, but keep in mind that the price you get might be slightly different from the price you saw when you placed the order, especially in fast-moving markets. Next, we have limit orders. With a limit order, you set a specific price at which you're willing to buy or sell the stock. Your order will only be executed if the stock price reaches your limit price or better. Congratulations, you've officially placed your first trade. Now comes the hard part: managing your trade and sticking to your plan. It's easy to get caught up in the excitement of the market, especially when your emotions are running high, but trust me, discipline is key to long-term trading success. Once you've entered a trade, it's important to monitor its progress regularly. Keep an eye on the stock price, track any news or events that might impact its performance, and be prepared to adjust your plan if necessary. Your stop-loss order will automatically limit your losses if the trade goes against you, while your take-profit order will lock in your profits when the stock reaches your target price. Alright, so you've been diligently managing your trade, and now it's time to make a decision. Do you hold or do you fold? Closing a trade can be just as nerve-wracking as opening one, especially when you're sitting on a profit. But remember, a profit is only realized when you sell. Ideally, the stock price hits your take-profit level, and you walk away a winner. But sometimes the market doesn't cooperate, and your stop-loss order gets triggered, limiting your losses. And then there are those times when you need to make a judgment call based on your analysis, your risk tolerance, and your overall market outlook. There's no shame in taking profits early or cutting your losses if a trade isn't working out as planned. The key is to stay objective, stick to your plan, and don't let your emotions cloud your judgment. Congratulations! You've officially completed your first trade. Give yourself a pat on the back. But the journey doesn't end there. The real key to becoming a successful trader is to constantly review your trades, learn from your mistakes, and refine your strategy over time. Remember that trading journal I mentioned earlier? This is where it becomes your secret weapon. Every time you close a trade, take some time to reflect on what went well, what could have been better, and what you learned from the experience. By analyzing your past trades, you can identify patterns and areas for improvement, which will ultimately make you a more disciplined and profitable trader. And there you have it, your crash course in stock trading. We've covered a lot of ground, from the basics of trading versus investing to the importance of analyzing stocks, managing your risk, and constantly learning and improving. Remember, trading can be a roller coaster ride with its fair share of ups and downs. So don't wait, start your trading journey today. And as always, if you enjoyed this video, don't forget to like, subscribe, and hit that notification bell for more trading tips and tutorials. Until next time, happy trading.